Hi, and welcome to the Midday Market Update for Thursday, September 24th, 2020. My name is Kevin Hill, and sitting beside me today is the Sultan of Sonar, Zach Strickland.
Or Mike Vincent.
No. Yeah, that is true, very true. So we have a great show for you today. It's always interactive. We're up on LinkedIn, and I need to go in and refresh right now to see your comments. Please give us your comments, questions. Love to interact with our audience, and we have an awesome show, don't we, Zach?
Yes, we do. We have lots of guests today.
We do have lots of guests. We're going to start out with John Kingston, our editor-at-large here, talking about a RICO case in Louisiana where they're staging accidents with trucks, and then on to Andrew Cox. So Andrew Cox will be coming up and doing some headlines, some employment numbers, the DHL supply chain PPI. And then we have Kyle Lintner from K-Ratio talking about trucking rates and volumes, capacity, all those good things. And to finish up, we have Michael Ryan from the M. Ryan Group talking about supply chain and the supply chain of vaccines. So let's get it started right now with our editor-at-large here at FreightWaves, John Kingston. How are we doing today, John?
I'm doing very well, Kevin and Zach. Good to see the both of you.
It's good to see you as always. So we're going to talk a little bit about a RICO case down in Louisiana where attorneys and a ring of other people there were some indictments a couple weeks ago about staging accidents to claim insurance with tractor trailers, and we have an update on that. We have new, I know, crazy. So we have new indictments. So fill us in on the original indictments and what's been happening last couple days.
Well, there have been 3 announcements of indictments, and the total number of people indicted are 28. And what's been going on here is that they've been staging accidents. So you have several people in a car. Some of the incidents that happen on, let's say, U.S. highways or even local roads, and they would identify a truck or, in one case, a bus, and they would say, like, that's our target, and they'd pull out, and they would cause an accident. I mean, obviously, they would try to avoid a fatal accident for their own safety, but they would cause an accident in which they would somehow collide with the truck, and then they would go through this whole dance of, like, the driver would get into the passenger seat. That one I didn't really understand, but then they would claim all sorts of injuries. And it's not exactly certain how this unraveled, but the fact is there has been money paid out to the quote-unquote victims. This has not been without damage. Truck insurers or truck companies, a lot of times the amounts paid out by the truck companies have been small enough that it's in their deductible. But anyway, this did start to unravel. There have been indictments of 28 people who were involved on the road. There really, as far as if I remember right, there haven't been any indictments of people who were kind of the mastermind. Now, that brings us to the RICO case. There was a case filed a few weeks ago, a suit brought by Southeastern Motor Freight, which is active in the area, RICO case against an attorney named Danny Patrick Keating, Jr. And he is a trial attorney. And in the indictments, there are references to Attorney A and Attorney B as kind of being the masterminds behind this. In the latest indictment, there's also a reference to a co-conspirator A. And the RICO case alleges that Danny Patrick Keating is Attorney A. And also that his partner, Simone Nugent, is Attorney B, though she is not part of the RICO case, really sure why. But let's just say that if this is the case, that I would say that Mr. Keating is in quite a bit of trouble. And there are 2 people who have been indicted and pleaded guilty, and they are cooperating. Assume that there are probably more, and if things play out, you would assume that maybe they're going to testify who Attorney A is. Presumably the prosecutor already knows this, what that attorney did to stage these accidents. But imagine when the indictment comes down on whatever person it is who did that, it's going to be a massive one.
Now, John, I guess I'm a little confused here, but I'd like to hear a little bit more clarity around just why the Attorney A and B identification is so important in this case. Like, what exactly are they culpable for?
Well, if you read the indictments, basically Attorney A and Attorney B we're kind of the puppeteers here. They were the ones that set it all up, hired people who then hired other people who just kind of rode along in the car. And the idea that they were doing this was that they would then represent those individuals in litigation against the truck companies that were involved in the accident. In one case, they asked for $2 million for one of the victims. They didn't get it. But some of these victims have actually, I hate to say victims because I don't think they're really victims, but you know what I mean.
Right.
They have received some pay. There has been some real money that has been paid out here. So Attorney A and Attorney B are being viewed as the people who masterminded this. They have not been indicted yet. They were not identified by name in the any of the indictments, but they were certainly identified by name in the RICO case brought by Southeastern Motor Freight. And you've got to expect that there's going to be some indictments coming down. There's also a co-conspirator A. There's really no indication who that person is. I would say that Mr. Keating's role as Attorney A actually was kind of suggested at in the New Orleans area media even before the RICO case was filed.
And Louisiana's always had a well-known reputation for being tough against trucking companies. You know, there's this old adage: if you get in a wreck in Louisiana, your truck's fault, car's fault, nobody's fault. Truck's going to pay.
Right.
It is going to pay, but yeah. Have they signed into law? I know that it was passed in the House and the Senate, the state Senate and House. What is a bill to limit caps on liability caps? Yeah, punitive damages in car crashes. How does that play into this role?
There has been tort reform. I mean, I was writing about this before all this broke about the staged accidents, and I will tell you that I do not recall whether they were actually firm caps on the size, but there were other steps involved in terms of like taking it to a jury versus a judge, and surprisingly, some of the attorneys down there defend trucking companies preferred to have it heard by a jury, not a judge. I know that sounds crazy because we always talk about sort of runaway juries and juries just giving insane amounts. But there were several reforms, and I spoke to some attorneys down there that represented trucking companies, and they thought reforms were significant. But I don't know that they had a firm cap on the size of judgments. You really got the sense from the changes they made there that while the big judgments get the headlines, the reality was it was a lot of these small things that kind of nibbled away and drove up rates that were of more concern. And you can see, you know, these staged accidents, the amounts out of that $2 million I mentioned, the amounts that were asked for were generally not gigantic. But yeah, presumably if there were enough of them, then they would add, this whole exercise would be, profitable, but they're not going to be too profitable if anybody goes off to jail.
Yeah, basically one of those things, they don't want to draw too much attention to themselves, so they're trying not to be on the radar for those nuclear verdict style cases, huh?
Yeah, but I have to say, I've kind of drawn another conclusion from this that really doesn't have that much to do with trucking, and it involves conspiracy theories. I'm very, as a journalist, I tend to be very anti-conspiracy theory. But, you think about these crazy conspiracy theories that a lot of people believe that involve, hundreds or even thousands of participants. A 9/11 conspiracy would have to involve 1,000 people. I mean, this little thing had maybe 30 people involved. Maybe there could be more. And they couldn't even hold this together. Somebody gets in trouble, somebody talks, and copying please, they start ratting out their fellow conspirators. Try to imagine what a conspiracy involving 500 people. What are the chances you're going to keep that quiet?
That's a good point.
It's a very good point,
Yeah.
and I feel the same thing about the conspiracy theories. I mean, you can't have this grand master plan where everyone stays silent. And it kind of reminds me of another story that you published recently on Walmart and a move away from diesel. How's that? Describe that a little bit for us, John.
Yeah, so Walmart came out this week with a sort of a grand plan. They call it like the 1 gigaton plan to reduce their emissions by a gigaton by like 2030 to zero out emissions by 2040. And one of the parts of the plan would be their rather substantial truck, which is about 6,500 vehicles being all zero emission. And, they came out with a supporting document on this that, was all upfront about saying we really don't have all the answers here. We're going to need some other developments on the side to happen. Like, for example, if you go if you say, well, we're going to go all hydrogen, well, you got to have a hydrogen refueling network to do that. So they're saying essentially they can't do it themselves, though you would think somebody with that much clout would at least be a significant player in moving the needle. Now, I think it was very, not ironic, but very appropriate that the same week that they said that, Tesla had its Battery Day. And as you may have heard, what people heard from Battery Day was not something they really embraced. There were certainly some very ambitious markers laid down by Elon Musk and the Tesla management, but whether they are reachable in terms of battery efficiency is questionable. What they said was that they felt that you needed $100 kilowatt hour battery efficiency to really make batteries competitive with internal combustion engines. They say their target is $60. They think they can get it down there in 2 or 3 years. That's a very big ask. And at a certain point, you do start to deal with the physics. And one thing that people who have tried to compete against internal combustion engines have always found, much to their chagrin, is that the efficiency of the internal combustion engine keeps getting better too. So it's not a moving target. The ICEs, if we'll call them that, they keep getting better as well. And you see that in trucks. Truck fleets say, well, our efficiency went from X to Z, and that's much better. And yes, part of it is that they may be driving more efficiently, they may be doing other things themselves, but the fact that the engines keep getting better. Competing against petroleum is tough. If you strip out everything else, it's a great energy source, and that's what makes it difficult when you try to displace it.
Yeah, so John, how realistic do you think this goal is? I mean, they themselves even admitted, we're kind of just saying this, expecting some things to fall into place. I mean, we have other things involved here, such as, gas is super cheap right now, relatively cheap, and you need all these other things to happen technologically speaking. So, I mean, is there anything in there that gives them accountability for a statement like this that makes you think that this is a realistic goal?
Well, they apparently did lay out a lot of things. For example, one thing they want to do is try to engineer cobalt, the process, because cobalt is expensive. Cobalt comes 50 to 60% from the Democratic Republic of Congo, so cobalt's always a problem. Cobalt's this great metal. It's got all these terrific attributes, but where it comes from is always an issue. So they've kind of laid that out with the things they want to do. They've laid down a very specific marker. We need 100 to be competitive. We're going to get it down to 60. So if they fail on that, it's not. They weren't vague this week. They were pretty specific about where they wanted to go. I would say this I'm not a battery expert. A few years ago, I remember talking to some batteries who said, we just can't seem to engineer it better. It seems to be stuck, but things have gotten better. So there has been improvement in battery technology. However, can they get it down to these ambitious levels? We'll see. Efficiencies in engines have all improved. I would still say that, for all you've talked about Nikola so many times on this show. Still, for a long distance, I think hydrogen is going to be a better source than batteries. Batteries are always going to weigh a lot. They need to be recharged. Hydrogen will be a much better alternative source, but then you still got to compete with diesel, which still remains out there a very tough competitor.
It is. It's a very tough competitor. There's a lot of people trying to find that solution for zero emissions. We'll see in the next 20 years if they can make a dent to where, we're going to cover California's new law here in a second too. But thank you very much for joining us today, John. It's always a pleasure. How does our audience reach out to you and become a source, give you story ideas? How do they reach you?
Well, jkingston@freightwaves.com is my email. I also tweet pretty regularly on issues of oil and of trucking, and I especially like it when they intersect. At John H. Kingston. Well, actually, I did put up a tweet this morning where they intersected. I took a look at ExxonMobil's dividend yield. It is 10% as of this morning. 10%. Wow. And meanwhile, trucking yields are all. I picked out 3 companies: J.B. Hunt, Werner, and who was my third? I can't remember now. Knight Schneider, and Knight Swift, and they were all below 1%. So that just shows the rather significant contrast between the companies.
Wow, that is 10%. That is that's a good number for a dividend yield. Thank you very much, John.
Yeah. Okay, take care.
So, yeah, very good. So Matt Henning, let's go. Mahamat Asali says hi. Heather Morton, howdy. She's territory manager at C&D Logistics. And Sylvia, Tiana, hi to everyone out there. Rhonda watching us.
Right.
They pointed out some mic problems. So that's what they're commenting on most, but we got those lined up very quickly.
Yeah. I guess I looked like I was talking and nothing came out.
I know. I guess it did.
Maybe I was miming. Maybe I wasn't talking. Yeah, but don't we have
miming? Yes.
Yeah, we could have. Well, don't we have Andrew Cox with some headlines?
We have Andrew Cox with some more headlines on FreightWaves.com, and you can find all of these stories on FreightWaves.com on the website. More coming out every minute of the day. How are you doing today, Andrew?
Hey, fellas, doing pretty well. The first one I've got for you is just a little weather update from Nick Austin. So we have the remnants of Tropical Storm Beta that has been slamming the south with rainfall over the last few days. We expect that to continue through the next couple of days, especially in eastern Texas and western Mississippi. Those have been the areas that have been hit the hardest so far. It's now moving through into Alabama and into Tennessee as well. Houston got absolutely drenched on Tuesday. They recorded a record rainfall of 7.3 inches of rain at the William Hobby Airport there in Houston. And like I said, the rain has not stopped. The National Weather Service now has flash flood watches posted through this afternoon in the Jackson to Columbus, Mississippi areas, and then also in the Huntsville, Alabama, and Chattanooga, Tennessee metropolitan areas through the end of Thursday night tonight. So drivers just need to be prepared for delays and possible roadblocks on portions of Interstates 22, 24, 55, 65, and 75. But this is a developing story, so make sure to tune in to Nick Austin and all the weather coverage here at FreightWaves for all the latest.
Yeah, Houston, got hit by Harvey a few years ago, which was a major flooding problem for a lot of carriers, and it created a lot of delays in shipping and things like that in the southern part of the Houston metro area, which is basically where all the hub of the transportation is, got clobbered this week, and we've seen a little bit of impact in our tender rejection rates and stuff like that, but I don't know how much of that is actually attributed to the storm.
I don't know either, but it is interesting because January or late fourth quarter, September of 2017, we had this tight capacity environment, and the Hurricane Harvey really impacted that. And then
it really didn't turn back on though until Harvey and Irma really made their way through. So I don't think this is obviously not the scale of that. I think they got something like 20 inches of rain, and what did he say, 7 inches?
Yeah, 7 inches. I mean, it seemed like in 2017 it rained for weeks in Houston.
Yeah, it just
deluge for weeks.
Yeah, it was still there like days later, just churning over it, and now it's all the way up in Chattanooga already. So
yes,
we're starting to get a little of that now.
We definitely are. It looks like you're going along with Nikola and diesel and hydrogen. It looks like some of those talks with the partners to build hydrogen fueling stations have stalled this week with the troubles with Nikola.
Yeah, that's right, Kevin. The bad news keeps piling on over at Nikola. The company had promised that it would find and sign a partner as a co-developer for its fueling stations, that's hydrogen fueling networks that it plans to build. They plan to have that partner by the end of the year, but as this Hindenburg short seller report has wreaked havoc on the company over the past week, we're seeing some of those talks stall. The first one, at least one that's been kind of publicly said, was BP, that those talks have stalled again. And this is really the newest setback. It's the first outward indication that the controversy around the report is actually impacting the startup's ability to execute its business plan. And although Kim Brady, Nikola's CFO, said that nothing has changed in the company's business plan, this may be the first step in them having to change that business plan. The company has said that they will continue searching for fueling partners, but it seems for now that BP is out of that picture. And there are still other players out there, but Nikola is keeping everything behind closed doors. They're seemingly keeping a tighter lid on the public relations and the outsourcing of information to them. They're keeping a lid on everything right now. So hopefully we'll hear more from them soon. But right now it seems BP is out of the picture.
Yeah, I wonder why they're keeping such a tight lid on things at this point. Kevin.
Well, I would say that if these talks are started, if there's no filling stations, then that is a change to the business plan.
Yeah,
I mean, there's no
to.
way to go forward. I think they came out, was it last week or after the announcement that Trevor was stepping down as executive chairman, about having to truck hydrogen fuel to the filling stations, which is going to exponentially increase their cost of producing and delivering hydrogen, right?
Yeah, so I mean, and to John Kingston's point earlier, I mean, hydrogen may be the better solution to all this as well. So
it may be. I know Andrew Cox has very strong opinions about this, so I want to ask him.
Yeah.
What do you think, Andrew?
Yeah, I certainly think. Well, I mean, we're going to talk shortly about Governor Newsom's, California, their new law to make all trucks zero emission by 2045. So there's going to be a demand for multiple winners, I think. I think there's going to have to be both electric and hydrogen powered trucks that get us to that point of zero emissions. But while hydrogen may be the better solution long term, right now it's really expensive. So Nikola is expecting to have to spend between 15 and 20 million per fueling station. They want to have between 600 and 700 of them across major traffic lanes of their partners. But they also have to bring the cost of hydrogen way down. That's something that people really don't talk about right now. Their break even expectation to get to is $2.80 per kilogram of hydrogen. Currently, the costs in California are upwards of $16 and $17 per kilogram. So they've got to bring that down by a factor of 4 or 5, which is something that people don't really talk about. So while hydrogen may be the better long-term play, they've got a lot of major steps in their way to do so. And one thing you asked Kingston, I think it was you, Zach, you asked him, what credibility or what accountability did Tesla have about these massive things that they're saying that they're going to do? Well, they've got a long track record of saying those crazy things and then accomplishing them maybe a year or two after their set date, but they do eventually accomplish those goals. So they have a track record of doing so, and that's the pony that I'm betting on moving forward.
So Dooner just slacked me because he will not stop talking about Nikola. He will not stop talking about it. He's saying that he's measuring right now. The stock price is down 41% this week. It was down 20% this morning, primarily on this news, I would imagine. But it's rebounded and it's just down 5% on the day right now. But the hydrogen play flows right into our next story about California's new law. And I know Zach is, he's got an opinion on it, but let's flip it over to Andrew to tell us the details.
Sure, Kevin. So California Governor Gavin Newsom signed an executive order Wednesday that aims to end the sale of new gasoline and diesel-powered passenger cars in the state by 2035. According to the release, the California Air Resources Board, or CARB, will develop regulations that mandate by 2035 that all new passenger cars and trucks sold will be zero emission in the state. CARB will also develop regulations requiring all operations of medium and heavy vehicles to be 100% zero emission by 2045, where feasible, with the mandate going into effect for 2035 for drayage trucks. And it's really unclear what the agency means by operations. FreightWaves has contacted the CARB for clarification. We haven't got that yet. We will be updating whenever we do. But Newsom believes that this order is the most important step for California to fight climate change. The CARB says that transportation accounts for 50% of all carbon emissions in the state of California.
Yeah, so Andrew, California is near and dear to me in terms of a state that definitely is a challenge to operate in for a carrier, having had to deal with that in my previous life a good bit. My concern here over this, Kevin, is the fact that this feels more like we were talking about earlier. This feels more like a political move. Is it really going to spur action? Is it going to have that tangible result other than simply if the other states don't go along with this, if the federal government doesn't support this in some way, what is this going to do other than say all these truck manufacturers are now going to sell trucks outside of the state of California, and to mandate this type of stuff on businesses inside the state that's so discrepant from the rest of the country. People try to find ways around that. And because they can get outside, they can move outside the state.
They can. Any projections 20 years in the future, I don't even pay attention to them. 50 years, there's no reason. If I'm alive in 25 years, then I'll start caring about it, or I guess 15 years.
Right.
Not 25 years, but if I'm alive in 15 years, I guess I'll care about it. Maybe some of these problems will be solved, maybe not. I do have something here from Travis Hamden, General Manager at Condesa Freight, and this is for Andrew. Is he says, tell Seth Holm, if it was up to me, trucks would run on Topo Chico. And it's a reference to great quarter guys from a couple days ago.
Nice. Seth is, I can't believe Seth loves seltzer and he doesn't like Topo Chico. It's nuts to me. But one more point on the executive order here is that you're right, Zach. It could be some political posturing here, trying to bolster up their really emissions fight. But you got to know that California, they are the ones that typically lead the pack when it comes to legislation. They're the ones to try things out, and then it moves eastward across the country. But I do wanted to say that I don't know if this is necessary. If we look at what private business has been able to do in the acceleration of zero emissions vehicles, just look at Tesla. I really believe that Tesla has brought the whole country forward 10 or 15 years, accelerated that path. And I think more companies are now joining in on that. So I agree with you. I'm not sure that this is even necessary, and it may just be political posturing, but we'll see how other states and how the federal government reacts in the coming years.
And let's pivot now from something that California is doing for 2035 that really is a political statement, let's say, to just things that really affect the industry right now, and that is part of the Highway Trust Fund. And what did the House vote on, Andrew?
Yeah, Kevin, the House passed legislation that injects $13.6 billion into the Highway Trust Fund while also extending the FAST Act at its current level of funding. The resolution passed with bipartisan support on Tuesday and is expected to be taken up and passed by the Senate by the end of the month. The FAST Act, which is an acronym for Fixing America's Surface Transportation, was set to expire on October 1st, but will now have enough funds to run through October 1st, 2021. The $13.6 billion should be enough to keep the fund solvent through the next 12 months. And this change comes after a coalition of 88 businesses and government groups have been fighting and pushing for an extension and also an increase in funding. It seems only the former request was fulfilled here. But states rely on this Highway Trust Fund to fund highway and intermodal projects. But the fund has really struggled through this coronavirus pandemic. It has struggled to remain stable due to the declining gas and diesel tax revenues, and also just the lower fuel consumption due to the coronavirus pandemic.
Yeah, I think this is one of those that's kind of like common sense. The government definitely needs to step in and get this thing funded. A lot of these states, especially, for the highways that the trucks and, of course, we drive on our cars, rely on, and they set up their budgets around having funding for these projects. So you have a lot of projects that are midstream even, all around Chattanooga, 75-24 corridor.
You have a lot of projects around.
A ton of work done to it right now, which if that were to shut down, there would be a tremendous impact to freight flows and traffic patterns, et cetera. So when we do come out of this, you would be left with it looked like a post-apocalyptic scene, really.
It would definitely around here.
Yeah.
It seems like it's never going to get finished. And we have a couple comments here. Big Rig Barbie says BP favors RNG as a future fuel, not hydrogen. And Matt Henning, comment about California. California will just force fossil fuel vehicle sales to other states nearby. California has the toughest laws on the books yet, and the worst air quality, kind of going off what you posited, not to, during that story. And Rhonda says, keep healthy. So.
We'll try to do that last one.
So, Andrew, we have about a minute left before we have to let you go and go to our next guest. We're writing the DHL Supply Chain Pricing Power Index today. It's been on 85 for the last 3 or 4 weeks out of 100 for huge pricing power to the carriers. What are your thoughts about what we're going to publish today?
Well, I won't give you the full preview to the number because I haven't quite got it yet. But I will tell you that volumes are picking up again after a little bit of a sluggish week. They've picked up towards the end of this week, and the same thing with tender rejections. They had begun to kind of fall off the peak, but again picked up here in the last couple of days. We're also seeing rates. Although they may have peaked, they have fallen down from 295 to 291 on a national level from truckstop.com and Sonar. But also JP and the Passport team titled their weekly trucking markets paper, The Flattening. So maybe we could see a little bit of a drawback here in this week's paper or in this week's PPI report. But if anybody wants any of those Passport research projects, be sure to go to freightwaves.com/passport. JP's team gives very in-depth 3 times a week research reports for everybody in the market, not just carriers, but also brokers and shippers as well.
Yeah, there's a whole lot more that goes along with that Passport subscription too, other than just research papers. I mean, there's all sorts of interactions and detailed work done by that team. So it's definitely...
Yeah, it's a community.
Yeah.
It's a community, and we're building that community out. It's been an amazing product so far, and it just keeps growing month over month.
Yeah, it's good stuff.
Yes. Thank you very much, Andrew, for the news headlines. And we'll all be looking, I believe, this afternoon or tomorrow morning for the DHL Supply Chain Pricing Power Index.
Yes, sir. All right. You guys have a great rest of your week.
You bet. Thanks. Thanks, Andrew. So Heather Martin here says, a quick search for here in BC per The Verge. May 2019 released the following. The law mandates that 10% of all vehicles sold by 2025 be zero emission ones, while the sale of fuel burning, and it cuts off there, fuel burning cars and trucks will be banned outright by 2040. So British Columbia, the West Coast.
Yeah, you've got to have these things. I don't know how results driven they are. That's really my point in all this is you can say a lot of things, but how are you going to get there? You have this goal in mind, but what's your plan to get there? Is it really just talking about it, or is there something that's going to hold somebody accountable? 10%. How do you control that?
You can't. It's a political statement.
Right.
It's a political statement. It's 15, 20 years in the future, and it is the same kind of thing with Walmart as well. Yeah. If all these things are right, we'll be zero emissions, right? But it's like, so that technology doesn't exist yet, but there's a lot of smart people trying to solve that issue. So
I guess we need to at least acknowledge it.
We do. Yeah. We do definitely have to acknowledge it. But I'd rather talk about the freight markets and rates, and we got into a little bit with Andrew, but talking about how truckload volumes and rates and kind of that market dynamic with Kyle Lintner, who's the principal at K-Ratio. And talk about the freight markets. That's what we like to talk about, right, Zach?
That's exactly right.
Yeah. How are you doing today, Kyle?
I'm doing well. How about you guys?
We're doing great.
Well, what's all the morbidity talk about not being around in 15 years then, Kevin?
I don't know. There's no reason for you to worry about 15 years in the future. Especially if you don't control any of it, So that's. But I'm kind of a morbid person, anyways.
I'm going to have $6 trillion in 15 years, Kyle.
Hey, you know what? You might, and there'll be $795 quadrillion in the U.S. economy by that.
I know, right? The only way I get to $6 trillion if we have 5 million% inflation,
right?
Over the next 15 years. So,
we're trying to get there.
I know, right? Well, let's talk about trucking rates and inflation. You did a LinkedIn post this week that was very interesting, and can you give a recap of that?
Yeah, sure. The point I was trying to make on this, and I heard you guys talking a little bit about it prior to me coming on, was that truckload volumes and both cancellations don't necessarily have to continue to increase for us to see rates continue to increase, because so much damage has been done to the routing guides already. And it's one of those situations where we're a little bit past the point of no return on this. So now we're in the situation where the carriers are in favor. They are dominant. If we think about the DHL supply chain index, it's a carrier market, and now they can dictate price. And if we think about this from just a pure market perspective, we're on a price discovery mission. The goal of the marketplace right now is to get to a point where price is so high that everyone who can order another truck will do, so that by the time those Class 8 orders come around next year, we're not in the same situation that we're in today.
Yeah. So how much, Kyle, we've seen, this fragmentation debate, about trucking networks on and off. And a lot of the talk has been around, how is it, is it just network imbalance, or are we truly seeing a demand side event that's driving a lot of these rates higher?
Yeah, I try to touch on that too, because that comes up all the time, and I don't understand why there has to be so much disagreement and argument about it. It doesn't have to be one or the other. It's both right now, and that's what I was trying to say. Yes, we're fragmented. That's always going to be the case in freight. So there's the freight dislocation. The trucks aren't in the right place at the right time. That's going to create the imbalances. We'll see price on general increase, and then that spreads throughout. But we also just have more freight going on right now. So on average across the board, there's not enough capacity. So we don't have enough capacity, and then now we don't have it in the right place at the right time. That's the double whammy, and that's why we see the violent move in price that we did over the summer. But it doesn't have to be one or the other, and unfortunately for a shipper right now, it's both.
I think you detail it really well in your video why it is both. In the LA market, the Inland Empire is a perfect example. You have so much volume coming in, and you have long hauls going out. Can you explain that, the philosophy behind that?
And even if we want to go back in time and think about this, if it was just a dislocation issue, we wouldn't still be in the situation now. Because this first popped its head up back in May. You know, LA got super hot. It was probably stimulus related, but a lot of it was just the change in consumer behavior. So LA has an overheated market. They need more capacity. If that was just a dislocation issue, the trucks are going to show up. Trust me. When you're seeing the rates that you did from outbound LA, every carrier in the country is trying to get there. The fact that those rates were sustained and we're still talking about it now means that we don't have enough trucks to cover it all. So the point that I was trying to make in the last post was that was the situation that got us to where we are today. We kind of had a little bit of a pullback in LA volumes in the past few weeks or so, but given the amount of cargo that just showed up there, it's going to happen again. And because we don't have enough trucks overall, we're going to get that dislocation again. And Zach, you know, I've heard you talk at length about this one aspect with the rail volume being what it is and no capacity on the rail. All of this stuff is going to go long haul, which pushes those trucks further away from LA, and it's going to be a while before they can get back. That just exacerbates the problem even further. And, you know, if I saw an interesting chart the other day that plotted retail sales against total business inventory to sales ratio, and they're a complete mirror opposite images. Part of the problem that we're in today is the fact that businesses were running so lean, there are no inventories. You know, I had a conversation with a large bottled beverage company that is long haul pulling supply from the West Coast all the way to the East Coast over the road because they can't get it on the rail, and they have no inventory in any of the warehouses out east. That is a problem, obviously, for the shipper, but that now becomes the problem for all shippers in the country because we're yanking trucks left and right and not being optimal in how we go about that.
Yeah, so, you know, this has obviously been an ongoing thing for the last several months. How long do you expect this pattern to persist? I mean, we're seeing, you know, just like you said, a lot of pull forward, a lot of freight coming into the country right now. People are struggling to get capacity, but then, you know, is this truly like, you know, retail sales have not fully recovered from where they were a year ago. You know, a lot of this freight is thought to be getting ready for the fourth quarter and the peak season there.
Yep.
Do you think that maybe in the first half of the year we might see some level of, like, what are we going to see softening? Are we going to see some level of, you know, retraction?
I do think it is next year. It isn't this year.
Right.
We're almost into October now. We're going to get into holiday season. We've already seen the freight show up on the shores of the West Coast. This problem goes through 20. Now we think about 21. Historically, volumes do pull back first quarter. We all know that. February is a very soft month. It would be hard to think that the current torrid pace of volumes persists that long. You know, I have my own opinion on discretionary spending from those that do have it right now as we shift from service to goods and away from travel and leisure. But everyone's not going to keep buying widgets in Q1 of next year. So we'll get some softening in volume. I think that's certain. But and this goes back to that point I was trying to make earlier. We don't really need that much of a pullback in volume to still stay at the problem we are with now in rates because there isn't enough capacity. So we'll probably see that dislocation issue disappear. We'll get trucks on average in the right places at the right time more often, but there's still just not enough trucks. So that'll keep somewhat of a floor under prices, but really the biggest component that'll keep the floor under rates is right now it is such a problem for shippers that they are going to the mini bid. Some of them are moving up the RFP schedule. As those get renegotiated, you now have a higher level that the broker has to deal with when they source the carriers to cover their freight. Because every broker out there, when you're covering your contract business, that's spot rates. So now you already have that next step up in spot rates. That won't allow it to come back down. I think the real meat of 21 is going to be in the back half. Because if we get any sort of a pullback in volumes, and we have a new higher level of established contract business, the margins for a 3PL will go back to something like we saw in 2019, where the whole name of the game was, let's get as much dedicated business on our books because we're going to cover it super cheap. And if you time that up with realistically when some of these Class 8 orders are going to show up, now you kind of have a recipe for disaster similar to the 18 to 19 carryover.
So yeah, that's a really good point. And you know, when does capacity come? Because it's a cause and effect. You know, tender rejections, once it hits a certain point, rates are going to adjust higher. Tender rejections are going to come down.
Yep.
But really to have new capacity hit the market, what data points are, I'm going to ask Kyle this, and I want you to answer too, Zach. Okay. What data points are you really calling out? I know Class 8 truck orders are always a favorite. I'm kind of looking at bonuses. Driver bonuses. Once I start seeing driver bonuses become accepted, that's something I don't know if that's the correct way to do it or if that's the best data point. I want to get you guys' feedback. Kyle, you go first.
Sure. Kevin, that's a really good point that you brought up about driver bonus. I've had a few conversations with some very large carriers in the past few weeks and then all the way down to the mid-sized guys. And that's one of the questions I asked them is, what are you guys doing about recruitment and retainment of drivers? And some of them have shifted away from the bonus, the sign-on completely, which I think is an interesting time to choose to do that, while others are saying that they're increasing it just for that singular reason. I even had one guy tell me some guys called asking what their sign-on bonus was. They told them that it's $10,000. They said, I'm not willing to entertain anything that unless it's over 25, which I think is egregious. But the fact that somebody could even say that to you kind of shows where we're at with respect to putting people in the seats. I will say that the percentage of assets currently idle at some of these carriers is a little shocking. We know there's a lot of people that are looking for work right now. I don't know what we need to do to get them into this industry.
Yeah, it's one of those things, you know, we can have all the trucks we want, but if nobody's going to drive them, that's a problem. And I know that there's been a lot of, I wrote about this just recently, as driver recruitment has now shown its head, you know, as capacity has been tightening over the last little bit and demand has recovered and sustained faster than many people anticipated. And all these schools and these, you know, new entrants to the space were shut down during that period of time. So being able to catch up with that is really difficult right now. And, you know, I'm looking at some driver turnover rates that we have in some of our TCA data. That's a good indication of how much leverage a driver has right now. They can just, you know, we used to say, well, they can just walk across the street if they don't want to service the freight or move that load, and they did. And that's when the market's at its tightest, is when they basically are just hopping from space to space, or they go and get their own truck.
That's the problem right now. And I'll say two things to that. So if we have a situation where spot rates are where they are, and you're a driver and they are putting you on dedicated business, and then your buddy over, like you said, he's across the street and he's saying, hey, I'm getting paid this much over here. What do you think that driver's going to do? They're just going to keep chasing the highest paying lane or the highest paying company who's ever providing it to them. That only rears its head when we're in this situation. That's an unfortunate byproduct of the current environment. And I'll say on top of that, we all know the easiest way to add new people to the workforce, right, is to put out a higher level of pay. That now becomes a bigger expense to whoever is the carrier on that. That's got to get factored into the rate that they're supplying to the customer. So that's another trickle-down effect on how we get an inflationary aspect to rates that is going to be something that sticks around into the future, whether spot rates themselves stay up here or not. Contracts got a lot of wind behind it.
Yeah, definitely. You know, Kyle, I could sit here and talk about this all day. I know Zach could too. We have to hop to our next guest though, but we'll have you on very soon again to talk about this, and maybe with these inflationary rates, I can be a trillionaire one of these days. Maybe it doesn't get that inflationary. But how does our audience reach out and learn more about yourself and K-Ratio?
Easiest way to do it is check us out on the internet.
Very good. And if you're not following Kyle Lintner on LinkedIn, go do it right now.
Definitely.
Excellent videos, excellent content, excellent discussions as well, right, Zach?
Really sharp guy. Really sharp guy. Came from the markets, but 2035 goals. $6 trillion.
$6 trillion, yes. Inflation or not, it doesn't matter. $6 trillion. Inflation would probably help, but with national debt and everything, it could be achievable.
Probably not the best solution.
Probably not. I'd like to welcome our next guest on now, Michael Ryan, who's the managing partner of the M. Ryan Group. How are you doing today, Michael?
I am doing well. Thanks for having me. How are you guys?
We're doing great. Doing great. For our audience, can you explain a little bit about the M. Ryan Group and what you guys do?
So the way I describe it is I am the inventory iceberg crusher. So I help manufacturers who have either too much of the wrong product or not enough of the right product, harvest cash off the balance sheet and keep their inventory turning.
So essentially you make sure that the inventory levels are at an optimal level, correct?
Correct.
All right, and that's been, of course, a huge deal this year with, a lot of, well, actually over the last 2 years, has it not? As shippers have really struggled to maintain because they, the inventory is at the level that they want. Either it's due to the trade war or the COVID environment, correct?
Yeah, it's been the dynamics, the underlying root cause has certainly changed over the last 6 months. But the fact is, having good visibility to the demand and understanding how to line up and time the supply is more critical than it's ever been.
Yeah, for certain. So are there any silver linings of this new environment with COVID that you've noticed?
Yeah, thanks for asking the question. There's a couple that I've seen. The first one is the businesses that had some sort of risk mitigation or continuity planning in place have come through this in a much better position than businesses that had no contingency planning. So businesses that were prepared for interruption certainly have fared better. And the other silver lining I've seen out of this is, number one, a very rapid adoption of technology. And number two is people actually talking more. People picking up the phone or hopping on a Zoom and saying, hey, I need your help. Can you help me? As opposed to, it's the difference between passive communication and active communication. The analogy I like to use is when somebody sends an email and it's urgent, 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 I ask them, would you send an email to the fire department if your house was on fire?
Right.
And it's like,
very true.
No. Yeah. So pick up the phone. If you need something, whether it's from a supplier or a carrier, right, the easiest way to get that is just to pick up the phone and have a conversation.
Yeah, we wrote a paper here at FreightWaves about stress testing supply chains. And it's something that I think is in everyone's vocabulary right now. And you touched on it a little bit about contingency plans and how important those. Is that something that you're hearing out there with your clients whenever you're talking to the market quite a bit right now? Is the philosophy of starting to really use better methods to stress test supply chains?
Oh, absolutely. It's number one is stress testing the supply chain before you need it. And number two, I see it as an opportunity to drive conversations upstream because in many cases, it comes down to planning. It comes down to having conversations in advance when you need something. So, if we roll the clock back 2 years ago, people were shocked when they couldn't get a truck the last day of the month or the last day of the quarter to do a pickup. And it's like, hey, you knew 3 weeks ago that you were going to ship this today. Why didn't you pick up the phone 3 weeks ago and call and schedule a pickup? So now I think it's, in the COVID world, it's like that times 10 in terms of as soon as you're going to need something, be it from a supplier or a carrier, you need to pick up the phone and you need to get on that schedule because the longer you wait, the probability of being able to execute just goes further down, down, and down.
Yeah, and speaking of stress testing supply chains, the COVID, of course, has this indirect impact to supply chains across the United States and the world. And, as this vaccine becomes available, what do you think, people should be doing right now to make sure that we have the most effective way to distribute this so it can get to the places that it needs it most?
That's a wonderful question. And thankfully, the medical supply chain is built. It exists. It's been something that has absolutely been stress tested over the last 6 months. So knowing that there are lanes in place, knowing that there are carriers in place, by and large, I would say that the people who are producing the vaccine know exactly where it needs to go. So it's going to be having those conversations and putting these plans together so they know how to execute. And the only question becomes one of, okay, well, when do we execute? When does this become available so we can get it on trucks and get it out to the people who need it?
It's very important. I mean, the whole supply chain, and it's such delicate product. You know, it has to be held at a certain temperature that's far below 0 Fahrenheit, right?
Right.
And this whole cold chain solution, air freight, air cargo, it's a very complex system. So, as you mentioned, Michael, that people need to start thinking about it right now.
Yeah, there's a lot more intricacies with this type of freight than other type of things moving across the country.
Yeah, and it kind of goes into a point that we wanted to talk with you about too on the supply chain is collaboration and transparency, and how kind of that feeds into that. But it's whether it's you're very low tech, very easy, I guess easy freight or low tech. Low tech products or very high tech products, collaboration and transparency are very important.
And it comes down to, it really comes down to communication. If people can, and a lot of it comes down to planning. I mean, that's fundamentally where my roots are in the supply chain is around planning. And being able to say, here's what I need, here's when I need it, here's how many I need, and being open and transparent with your suppliers. Firsthand example, I'm working with a client now. They have some manufacturing done at a sister company, and they would basically drip out purchase orders one at a time, very little visibility, maybe 2 weeks in advance. And I was brought in because they needed a plan. They were having supply challenges. They were having difficulties meeting their customers' needs. I said, okay, well, the first thing we need to do is say, here's our demand by week for the next 12 months by part number. Let's give them a way to scope out what our requirements are. We want to give them all the information that they need to be successful. Because if they're not successful, we are absolutely going to fail. So to me, the idea of, playing something close to the vest, it doesn't give the full picture that is needed for somebody to execute. So whether we're talking about, how much freight is going out when and where, or how many products I need to put out in the market or produce in the plant, having that full transparency allows everybody to see the big picture, because all too often, it may be that one piece of information that's held back that causes everything to just fall down.
Yeah, exactly. It kind of goes back to your initial point of urgent emails, right? Urgent emails. If you're just emailing someone one off saying this is urgent, that's not really transparency. That's not collaboration. Another part of that too is the whole rise of AI, machine learning. How does that integrate into, and how is it falling short as well, integrating into this whole philosophy of collaboration and transparency?
So in terms of AI, and I don't know if this is a 40-year-old adage or what, the idea of garbage in, garbage out. So if there's not good information being provided in the system for the machine to learn, it's going to be junk. So understanding, and I think a lot of it comes down to clarifying expectations of what information is needed in what format, what I would call some really remedial foundational things of, hey, help me understand what data is needed into the system so the system can learn. Because if every third line is junk, then then the machine-derived solution is going to be junk. And again, a lot of it comes back to that collaboration and transparency of understanding, hey, what information do I need to provide so this AI or machine learning solution can be successful? And you need to use a system, right? That's something that, especially I would say in smaller businesses where they're used to pen and paper or, a yellow legal pad on a clipboard, you got to get that information in the system. Right? If you want the system to work, you need to feed it.
You definitely do, and we talk about garbage in, garbage out quite a bit here at FreightWaves, and Zach and I.
Yeah, especially on the data end.
Especially on the data end, definitely. Well, thank you very much for your time today, Michael. How does our audience go out and reach out to you directly and learn more about the M. Ryan Group?
Thanks for asking. The best way is on LinkedIn. So if you type in Michael Ryan Inventory, or my handle is I Solve Problems, I'll pop right up.
Nice. Very good. Well, it was a great conversation today. We'll have you on very soon, Michael. Have a great day.
You too. Thanks for having me.
Thank you.
Yeah, I like that. I like that handle. I solve problems.
I know, I do too. I solve problems. That's great. Well, let's wrap it up here. Yep. Let's talk about next Tuesday, our next virtual conference here at FreightWaves. It is the real estate. The next virtual event is the future of logistics real estate. And that's going to be on Tuesday starting at 10 a.m. Eastern Standard Time. That'd be 7 a.m. Pacific Time. And this is the first virtual event focused solely on the future of logistics real estate in the freight industry. Expect to hear from experts from various links of the supply chain, talk about automation, warehousing, labor solutions, advanced strategies for optimizing the supply chain from start to finish. It's in partnership with Prologis, the global leader in logistics real estate. And I imagine we will probably talk about exoskeletons too at some point during that day.
I would assume so. It's kind of an underappreciated aspect of the logistics space, is that warehousing and real estate space that I myself have had to try to solve that problem numerous times. About where to position your hubs, your terminals, your warehouses and DCs, et cetera.
Yeah, and how to purchase, how to lease, all the great best practices of how to do that, especially if you're just starting out, or if you need inventory levels are down, but you need distribution centers to get out all that freight out.
It's a huge part of the equation of the supply chain. So
it is. It definitely is.
Yeah.
So coming up tomorrow at 12 p.m. is What the Truck, and that'll be the Dooner and the Dude. He'll be back in the office, and they'll have a collection of epic guests as always. And I'm sure Dooner will talk a little bit about Nikola. What do you think, the odds of that? I think that would be the easiest odds bet.
You probably lose money if you took the other side.
I know, right? Exactly right. Yesterday on Put That Coffee Down, the Freight Sales Podcast, Dooner and I talked to Killer Infographics. Amy over at Killer Infographics. We talk all about how to raise your infographic game. Is a great lead magnet. So definitely check that out on FreightCast. You can get the podcast version through the FreightCast feed. I can't talk right now. Apple Podcasts, Spotify, wherever you download and your podcast, and then tv.freightwaves.com. Everything we do is on demand. You guys did Freightonomics yesterday at 2 p.m.
Yeah, Freightonomics yesterday. We talked about driver retention and how important it was. Again, very topical, thing moving forward. We of course gave our update on the freight market itself, and we really didn't get to the macro side of things yet because we got stuck on that hiring drivers and the cost of that. So.
I know that's that macro side of it. This is such a it's
big.
Such a wide berth, and driver retention is really a hot topic, and it's probably going to get hotter going forward.
Yeah, it's going to have a big impact moving into 2021 for sure.
It definitely is. So Killer Visuals, sorry, not Killer Infographics. So Killer Visuals, but she's known for infographics. It's a great visuals for that. But we're wrapping up the show right now. So we'll see you next week on Midday Market Update.
Yep.